Hi, welcome to Promo Insiders, a podcast that covers the issues that matter most to the promotional products industry. I'm Chris Ruvo for ASI, and today we have the exciting opportunity to get insights directly from one of the most influential, powerful, and successful people in promo. I'm talking about Marc Simon, CEO of Halo Branded Solutions, the industry's largest distributor. Marc is a former Counselor Person of the Year and is in the top 5 of ASI's Power 50, a ranking of the most influential people in the industry. Leading a near billion-dollar company, Marc has a truly unique perspective on promo, where the industry is and where it's headed. We'll be getting his take today on everything from how Halo is performing to how the industry will fare in the short term amid potential recession pressures to how the industry will evolve in the years ahead. Marc, it's a pleasure. Thanks so much for joining me.
My great pleasure. Thank you, Chris.
All right, so let's jump into this first question here. How has 2022 gone so far for Halo? Has it been a good year? Are you seeing a sales increase?
Yes, in fact, it has been an excellent year. Our growth has been pretty significant, pretty dramatic, and we're enjoying our best year ever.
Best year. Wow. Okay. So best year ever. What's driving that performance?
Well, a whole lot of things. For one thing, there has been a return to sales meetings and trade shows and other get-togethers that are bringing people from so many businesses together. That has impacted everybody throughout the industry. We've had, we're in areas where we've just seen a lot of growth, industry-wise, geography-wise, and one of the things pushing that as well has been that we offer services, solutions that are aimed at helping employers attract and retain their employees. So in addition to promotional products, we're doing a series of employee recognition and rewards. We do uniform programs. They all tie together in terms of the employer being most successful at retaining their employees. And in this market, of course, that is vitally important.
Yeah, absolutely paramount. We all see the numbers about how tight hiring has been, the gap between the number of open positions and actual people who are willing to go out there and work. So it is a competitive market for retention and for hiring. And if you can provide that suite of solutions, I imagine that's going to be a nice spot to be in with your clients.
Yes, for sure.
Yeah.
We're also seeing, things like entertainment come back, and we do a fair amount of work in the entertainment industry. So, we're comparing our results in 2022 to date to the results in 2021, and don't forget it was pretty dry those first 3-4 months of 2021. The in-person events, the crowds for sporting events, uh, movies, whatever it was. It just wasn't what it is today, amusement parks and so forth.
Yeah, so it sounds like it's a lot of, hey, demand has bounced back, but but Halo has been able to capitalize on that and to really make the most of what's out there. Now, you started to mention entertainment, so that's a market, and that's actually my next question. Are there particular types of clients, types of markets where you're having particular success, where it seems to really just be gangbusters in terms of sales?
Well, it's the return of those industries back to where they were. And what is really most remarkable is we have very, very resourceful, creative account executives. And we had some who just they got buried by one client where they were so busy with this one booming large client, they couldn't service much else. And so they had a lot of eggs in one basket. And as they say, you live by the jump shot, you die by the jump shot. And, when amusement parks closed down, when sporting events became virtual, with no live audience, and on and on and on. we had some very resourceful people who went out and then got other clients and they built up other businesses. And then you have all this come roaring back. And as it comes roaring back, they're busy as could be servicing the new things that they've developed over the last year or two, and also getting back to business with their longstanding, highly, highly valued accounts. So it's been all of that at the same time.
That's interesting. So it's not so much a particular type of client or market. It's really cross market where you're seeing demand because there's just been a resurgence following what we hope was the worst of the pandemic, and then it's been the resourcefulness of account executives who are able to identify opportunities in difficult times, start to build them up, and then still be in a good position to capitalize on all the rest of it once it came back. So it's that kind of combination of factors that's leading to this what is, as you say, the best year ever for Halo.
Yeah, it's all of that, and then the additional capabilities that we have developed over the last 5 years that put us in a position to address every phase of employee acquisition and retention.
Okay. And when you refer to that, you're referring to some of the acquisitions like acquiring Michael Fina, the incentives company out of New York, and then the uniform business is well, kind of bringing all that together. Is that what you're referencing there?
Those are the kinds of things I'm talking about. So like for what used to be the Michael C. Fina Company, which was an institution in New York City, we acquired the business. The best assets we got, it turned out, were Jeff Fina and Mike Fina, two brothers who are just dynamic as could be. But what they have is for a very large retailer with stores all over the country. They provide incentives to their employees if they would sell a particular item. And then if you sold that item, you can get a lot more in the way of incentives if you sell the add-ons to those items. So they would pick up points, those employees, we would track the points, and then they would have catalogs that they could turn to, online catalogs for rewards. And we provide the rewards and incentives. And it's in retail, it's in automotive, it's in healthcare, quite heavily in healthcare. So it's all over the field. And then for some of those same accounts, we found that they wanted one source. They wanted to be able to provide the employee recognition and rewards from the same places that they were buying the typical promotional products and the uniforms, and uniforms more broadly, company apparel. It may be uniformish, it may not be. We had a couple of acquisitions in particular that were very focused on adding these solutions with the idea that we'll sell some promo to their accounts and we'll sell a whole lot of employee recognition rewards and uniforms to our other accounts. So long-winded answer, I'm sorry.
No, not at all. I hear what you're saying though. It's having that to be able to provide that comprehensive solution, kind of all those different facets, traditional promo, uniform, incentive programs, being able to provide all that. That's bringing all that revenue and all that need from clients. It's bringing it to Halo. So it explains why you're having a good year. But let me ask you.
But let me go further. I think most of the industry is having a good year. If you're not having a good year comparative to last year, this year, you might be in the wrong business, or you're not working very hard. We're seeing a lot of people doing well, and we congratulate all of them.
All right, very, very good. So given you saying that, this maybe this is going to sound like an odd question, but there has been a lot of there's been talk of recession lately. There's definitely been, between inflation and a whole variety of other factors, certainly some economic headwinds. Even with demand still being strong, have you experienced any lessening in demand as of late as a result of maybe some of these perceived or actual downturn in the economy?
We haven't yet, but I emphasize the word yet. We're watching it closely. It seems like we're in a very unusual economic time. On the one hand, you have inflation so very high, and whenever somebody happens to watch a recording of this video, it may be out of date. Not only is today Wednesday, July 13th, that we're doing it, but we're doing it at a little bit after 3 p.m. Eastern time. Things move that quickly where
Yes.
I say something that may be obsolete right away. But inflation this morning came in at 9.1%.
9.1.
So one thing you say, oh my God, so high. The stock market has been relatively flat today. The yield curve on government bonds has inverted. So that sounds like gobbledygook to a lot of people, but what it really means is that if you loan the government money for 2 years, you can get a higher interest rate from the government than you could today if you loan the government money for 10 years. And that's called an inversion of the yield that you can get on those government bonds. And generally, that's a sign of a recession about to happen. And say about to, it could be 6 months off, but over the course of the next few months, there figures to be a recession, which is highlighted, and the canary in the coal mine is the inversion of the yield curve, and it's happening because the Fed is indicated that it's more important to protect against inflation right now than it is to protect the unemployment rate. Unemployment rate, 3.6%, about as low as could be. Wages keep going up. Costs are going up. So they're jumping on that on the inflation and raising interest rates. Interest rates went up 0.75% last month. Talk is that it'll go up another 0.75% this month, and they're trying to tamp down demand. It seems to me that the issue, while demand is robust, there's no doubt, it's as much a supply chain, it's supply side, because we're not able to keep up with the demand because of imbalances that were created during the pandemic. So, for example, Heathrow Airport announced we're only going to permit X number of passengers to come through the airport. Why? Because they can't get enough employees to work in every aspect of the airline industry. We see it in the US as well. We see it in so many businesses in the US. Then you see you can't get enough chips. Chips are used for a myriad of products, but one thing that really stands out is automobiles. And so now it's harder to get automobiles. Price of automobiles goes up. So a lot of it is supply chain, and the demand for employees remains great. We say that we're finally back at a point where we're employing as many people as we did immediately pre-pandemic. You say, well, great, so we're there, but we're not, because every year our population is growing, our needs are growing. We need more people in the stream of commerce. And the question is, where are those people? Why can't we get them back in? A lot of people change their lifestyle. You also see the dollar going up in value. And the dollar is compared to the
We're almost
euro.
on par with the euro now from what I was reading today.
Yeah. So we're up 15-20% over where we were just a few months ago, and as much as 40% up compared to the euro of where we were a couple of years ago. And so why is that happening? We're up against the Chinese yuan as well. And the reason we're up is because our economy is doing better than the others. We're the safe haven, and that's good. It's also good for our suppliers bringing product in. We don't want them overstretched, on costs of bringing the product in from these other markets. Strong dollar helps us on imports, hurts us on exports,
Mhm.
but so much of what we're doing
We're an
is
import industry,
domestic.
so yeah.
We're an import, not an export industry
Yeah.
here. So that's good for us. So we've got a lot of things that are countervailing in terms of the impact. So are we going to have a recession? Most likely, yes. The Fed is going to force it. How steep will it be? Maybe not too steep, and nothing like that. We don't think nothing like what we had in 2008, 2009,
Mhm.
and impact on our industry, maybe not too bad because so much of our industry is servicing the employees of the businesses we do work for, and they're still dying for people.
Yeah.
So long answer, but
No, I think
that's what's coming.
it's a great explanation. And I was going to ask you, and you anticipated the question is, given some of what's happening, more broadly in the economy, how do you think promo's going to fare, say, over this last half of the year and into 2023? And it sounds like you don't have a lot of anxiety about it. It sounds like because of the reasons you just mentioned that not that I don't know if any industry is recession proof, but maybe given the dynamics that are at play as you just outlined them, that we're not in a bad position right now. And then just to add to what you said, with the fact that we've had this continued return to in-person events, anything from sports and music to conferences and trade shows, et cetera. I don't see that going back. I don't see that being put back in Pandora's box. That's going to continue to grow, provided that we don't have a major issue with COVID again. So that's another niche where our industry can continue to do well in, even if things more broadly aren't going fantastic.
Yeah. So one, I would say yes.
Mhm.
Two, I've got a three-part answer, which is
Okay.
that the rest of this year, we ought to do well. Uh, don't forget, we're up against comps that are much tougher the second half of last year than they were the first half of
For
this year.
sure. Yeah.
So if we're flat in the second half of this year with where we were second half of last year, it may not be so bad.
Mhm.
And we're up considerably already. So
Mhm.
flat to up a little bit, not really get hurt. We may have a modest setback early
Mhm.
next year if we're in recession. I don't think it'll be too bad. But the third part is the long term looks, I think, exceedingly good for our industry.
Mhm. Mhm.
And and the reason you might ask me, well, why do you say that? And I hate to take your job from you, Chris. You're
No,
asking the questions, but here
please,
I am.
you got it. Go.
And why I say that is, I'm just teasing you. Why I say it is that the more that companies become data driven and smarter about the data they have, and they're analyzing who are their most profitable customers, who are their least profitable customers, what's the nature of those customers, the demographics of them. It could be based on age, it could be based on ethnic background, it could be based on some sort of cultural features, region of the country. Who's to say? Based on a number of things, based on income. Uh, but the more you know who your most likely customers are and who your best customers are, you know who you want to target market to. And so you could put a billboard up on the side of the highway, you could have a newspaper ad, you could have a radio or TV spot. But if you really know who your customer is you want to get to, if you could put a product in the hands of that individual that is demographically appropriate for that individual you're trying to reach, that they would feel good about, that is the right theme, the right message you're trying to get across, and has your name and your marketing message plastered all over it, and they see it 3 times a day for a long time, you're going to get your money's worth out of it. So that means you'll be willing to spend more money per item, per customer. You'll make a bigger investment in that prospective customer because that prospective customer is much more valuable to you than everybody driving down the highway that might see your sign.
Right.
And I think that's going to lead to long-term growth for our business. And put another step into it is uh, there has been tremendous growth, as we all know, in digital advertising,
Mhm.
and it has been very beneficial, and it has worked great. It's leveling off. So the big push is leveling off, and people in digital advertising have been exceedingly smart
Right.
about how they're doing their messaging and who they're trying to get to, and how people bid for Google ad space and so forth. And we're reaching a level of efficiency there that I think is wringing some of the dollars out of it.
Mhm.
And there may be other places to put ad dollars that can put more money on the bottom line. So not only can you justify more money and a better rate of return with us, but comparatively, we might be a better deal as well when you think of the level of competition that has worked its way to the digital advertising. I'm not suggesting we're going to go back to billboards,
Right.
but
No, it's a great point though, because if as you say, the experts in the digital realm have become so efficient at positioning the people who can pay them best where they want to be in that world, well, it's going to be a tough nut to crack if you're a little guy. Whereas if you have a little money to spend on marketing and promotion of products are cost effective, even if we're talking about some of the higher end items, we become a more attractive play, perhaps.
I think we do.
Yeah. Yeah. All right. So let me shift gears a little bit here. I wanted to ask you this question about technology because I mean, it is the issue in a lot of ways. To what degree do you see technology disrupting promo over the next, say, 5 to 10 years? And how is Halo adapting to address and capitalize on that?
Yeah, so I don't see technology anymore as a disruptor.
Mhm.
In the first 10 years of the 21st century, I think we'd all agree it was a disruptor, and it caused a lot of changes. Price discovery, um, the disintermediation of people in the sales forces, people going to those online sellers. And
Mhm.
I think that side of the industry has relatively matured,
Mhm.
and it's not a disruptor. It's a fact of life, and
Mhm.
everybody has adjusted to how they're going to proceed. I see technology really as an enabler,
Mhm.
and it's a plus. It's a kind of thing that it's sort of part of the price of admission.
Right.
If you want to be servicing significant accounts, you've got things like cybersecurity. They
Mhm.
want to know how many millions of dollars of cybersecurity insurance you have. Uh, and then you get rated by those cyber insurance carriers on the levels of protection you have. And depending on the levels of protection you have, that's going to determine your insurance premium. So some people can't even be in that market. They can't get that insurance, and you have to have it to service these large companies. So that's just one piece. But the ability to have it friction-free service, uh, to be able to access product quickly, uh, speed, quality, cost, all of those are part of the ticket of admission, and it's an enabler. And the more you're dealing with larger companies, you have to be able to address them on their own terms. You have to work with their accounts payable systems, as an example, and bill online. So it's all part of what it takes to be in business. That's how I see it.
Got it. Um, I'll ask you now about acquisitions. I think it's fair to say, and not hyperbole to say, that Halo's definitely had one of the most aggressive and in a lot of ways one of the most successful acquisition strategies in promo in recent years. And can you tell us a little bit behind, what's kind of driven that? And then what have been the keys to kind of making those deals happen, but then ensuring that after the deal, there's actually successful integration? So I'm asking you a lot there, but take us through what you can.
Yeah. So we, as soon after I joined, we made the mission of the company in the first instance to be, we want to be the most efficient order management company in the industry. That's what distributors are doing more than anything. They're managing those orders through the process. So we wanted to be very efficient, and we became very efficient. And that allowed us to look at other companies in the industry and say to ourselves that their revenue is more valuable to us than it is to them, because putting it through our system, we're going to generate more dollars on the bottom line than they can. And therefore, if we have a value proposition to offer to those owners of those businesses and to their sales force, and we could put them on our system, we'll become even more efficient, because the more volume we could scale up, the more efficient we would be in many respects. So we were able to uh, offer purchase price to the owners of the business that was more than an objective, rational, economic, financial person would tell them their business was worth. We were the epitome of a strategic buyer, and we couple that with the fact that it has always been our mantra that the account executive is really our customer. When you think about who is controlling the customer relationships, who's the best person to decide what the customer needs, it's the account executive. And our mission is to service their needs. Our job is to add value to them, and we went at every department in our company to for them to justify their existence as to what they're doing to add value to the sales force. And it's not that they're not literally our customer, they're really our partner, but that has to be our mentality when we're looking at servicing them. So we put those together, and it allowed us to really take off on acquisitions. And we created what really was somewhat of a flywheel, where we would see that the more volume we brought in, the more efficient we would get, the more profit we'd make, and the more we would then have available, some for to go out to our financial partners, our investors, but a fair amount of it to be reinvested in the business to become that much better. So more efficient, yeah. Add capabilities became a big part of it. And we looked at something and said, well, if we could add this capability with the people we have now, they ought to be able to do more, and it creates even more value. So we went through that process, and we found ourselves working that flywheel, having it work better. And it's gotten to where we've evolved to where we're now looking at businesses not based on is there cost for us to take out? 10 years ago, the question was is there cost to take out? Right now, the question really is, who are their customers? What are their needs? And how confident are we that our capabilities will allow these very same account executives to sell much more, make more money themselves, bring more value to their accounts, bring more profit to Halo? And that has been what's been driving these larger acquisitions we've been doing over the past 4 or 5 years. And it has really been working, and that's been generating a fair amount of the growth you see us enjoying.
Yeah. And then just on the integration question is, I'm sure it's not a simple answer, but is there certain things that you have to do when you're taking, say, you mentioned some of the big ones, right? You've acquired multiple other what are now former top 40 distributors in recent years. Those are companies with ways of doing things and that had achieved considerable success in their own right. How do you integrate that into the Halo way of doing things, the Halo culture, and make it all work?
Yeah, so we find that while we all espouse the same values, and we wouldn't be talking to these people if we didn't feel that we shared the same values with them, but we all have those same values. And then we're talking about, well, what are the needs of the business? And whose technology works better? It's not a love affair with the technology. It's somewhat objective.
Right.
Uh, there are a few things that we would just ordinarily do. Uh, Go on our payroll system. These are simpler, easier things to do. Are there aspects of their technology that we want to incorporate into ours? Uh, and then we talk to the owners of the business about what their longer term objectives are. Do they want to stay and be part of growing the company? Are they looking for a good home for their people? What is it besides getting paid a purchase price? What else is motivating them? And we arrive at an agreement as to what integration is going to look like. Uh, there may be some people who lose their jobs,
Mhm.
not many, and we're finding, especially in this market,
Mhm.
if you have good people, we've got plenty of jobs for them. We got
Okay.
other things for them to do. And we've also been able to offer a fair amount of career advancement for some of the more talented people in these organizations. And it's been adding value to all of us. And we're just thrilled to have them in those positions. And it allows them to step up and instead of running this aspect of a 30 or a 50 or a $70 million business, you could be running or playing a key role in running this aspect of a business 10 times as large.
Mhm.
And then you've got more resources available to you and you can do more. So it works for those people. And we're not pretending we have all the answers on everything that we do. We try to be somewhat humble in our approach to people. And it's been important to us that the owner operators who sold us businesses have, for the most part, have chosen to stay with us, and they're still with us. And if we ever are talking to a potential acquisition target, one of the things I want them to do is talk to Mitch Munger, talk to Larry Cohn.
Mhm.
Now I say talk to Jim Childers.
Mhm.
There's a number of people to talk to get a feel for what's it like to join Halo. What's it like to do a deal with them? How does it all work? What can you rely on? And how do your people feel about it once the deal is done? Are you glad you did it?
Mhm.
And so that's all an important part of the integration effort we put forward. And one of our guys, he did such an incredible job at integrating the old Michael C. Fina into becoming Halo recognition. And this is the grandson of the founder, Michael C. Fina's grandson, Mike Fina, heads integration for us now. So
That's
he's been
wild.
with us 5 years and he's the head of integration.
Okay.
And other people have key roles in the company, and he gets it because he's empathetic as could be, and he was the object of the
Right.
integration once,
Right.
and he knows how it ought to be done. So that's my answer to that on integration.
All right. Very good. Very good. No, it's fascinating just because you just seeing from the outside these mega deals, how they happen, and just to see it come together and work is impressive, and just to have that insight into some of the inner workings is enjoyable. So let me ask you I got one more question for you. It's kind of broad. I'll just say, what are some of your biggest concerns and also some of your biggest hopes, or maybe not hopes, things you're excited about for promo as an industry, say over the next few years?
Yeah, well, so biggest concern is we import. It's our source of supply. It's our reliance so much as an industry on China. It's all of the geopolitical events that are occurring that could impact all of that. And we're forever saying to our suppliers, please find alternative sources. Use other countries. Don't keep all your eggs in that one basket in China. So that's our biggest concern. And our suppliers are resourceful. They're accomplished, serious people. They've got challenging uh, uh, issues that they have to address. They'll figure it out. And we're also fortunate that if something is not available, there's always something else to sell that is. And if China won't export product X, whatever that is anymore, for whatever reason, so maybe we can get product X elsewhere. And if not, does our customer really, really need product X, or can they go with product Y or product Z? We can always substitute. So that's my concern, that I still sleep at night because I remind myself of those thoughts.
Very good.
The upside is that promotional products truly add great value. The return on the investment is terrific. We will only be able to better and better demonstrate that return as companies become more data driven. And I see the industry continuing to expand as a result.
Well, that's a fantastically positive thought to end on. So let's maybe end there. Continued industry growth, a greater recognition of among our clients of the value that our industry brings is a fantastic ending thought. So Marc Simon, CEO of Halo Branded Solutions, thank you so much for being with me today. It was a really fun discussion. I hope you enjoyed it too.
I certainly did. Thank you very much, Chris.
All right,
Have
very
a
good.
great day. Bye-bye.
Yes.